Welcome everybody to this incredible panel discussion that we're going to have. First, let's see who's in this session here. I want to get this chat going so we can see if, as people kind of funnel in, that we have an idea of how many people have joined. Because this topic, it's a good one for a lot of people. Really hits home, and I'm excited to kind of kick this one off. So I'm going to give it a couple more minutes as people join in. Oregon, nice. Ontario, there we go. Woodlands, Texas, California. Fun fact, Kelly is my neighbor over here in New York. Not that far away. We are very close.
We actually met in person.
Multiple times. Yes, indeed. Aventura, Florida. Oh, nice. I was just in Hollywood, Florida. This was 2 days ago. So it was
you got a nice tan going on.
Thanks. Yeah, my kids too. Everybody got a nice tan. Now back to the cold. It is freezing. Yes. And let's see, Maryland. All right, cool. We got a lot of people coming in here. Just over 100, almost at 150, looks like. So great. All right, why don't we get this started? This session, I really think is truly valuable, and I think is going to be a super heater of a session because I myself, as somebody who has grown my firm, I would say like 85% of my growth was word of mouth. Talking about this discussion of turning clients into advocates, client loyalty, continuing to do good client service, and how do you keep the clients going and giving you good referrals is so important, because the reality of it is that good clients will keep giving you good clients, and bad clients that you just don't like working on are going to keep giving you bad clients that you still won't like working on. So, this is such a great conversation. So first, and foremost, I want to talk about our two panelists here. We got Kelly Rohrs and we got Peter Pilluk, who was currently on vacation. And Kelly and I have met a few times in person, which is amazing to now get to connect and do this here too. So why don't you guys introduce yourselves over here and give us a little bit of background about yourselves, and then we'll jump into the questions. Kelly, you go first.
Hello, everybody. I'm Kelly Rohrs. I am located in the rainy, cold Long Island, New York. I run a tax and accounting firm that specializes in professional services. We have 6 staff members. And my other love is supporting other accounting firms and other accountants. So you may have seen me on social media. I had a podcast that had a nice little run, and I run a free mastermind that meets once a month. I just want other people to know that they can find their own calm and they can clear the chaos.
Awesome. Peter, what about you?
My name is Peter Pilluk. I'm the owner of Creative Minds Accounting. We work with creative types, musicians, speakers, software developers, and the like. I do the accounting side and everything else, and my wife does the tax side. So there's just the two of us.
Oh, that's really cool. Those are some challenges.
I'm located in Kitchener, Ontario, but right now I'm in Punta Cana. So.
Nice. Good place to be. That's an interesting client mix too. And especially the clientele you're going to get in the music, the art, those kind of spaces, to be very unique clients. So managing those expectations is going to be a really great conversation. I'm excited to have it. And what we really want to talk about and what we're really wanting to kind of sit with and try to add the value in is how a few things that I want to touch on, which would be how do you maintain good client relationships? How do you keep that going to then leverage that and create more clients that are coming into you? And also how to spot bad ones, how to spot the bad fit ones that I think will be very important and good, and how to properly make them go away, so to speak. So first question up is for Kelly. Kelly, when you think of a client advocate, what does that mean to you in the context of an accounting firm?
So, I think it could go 2 different ways, and they could also be the same thing. So right off the bat, you think client, okay, who is an advocate for your firm? Like they're a current client, they rave about you, especially during tax season. Oh, who's your accountant? What do they do? When are you getting things done? Like, they love to talk about you in their centers of influence. However, I also think like a client advocate could be a referral source. And they could be both. Your referral source could be your client. But that's like where I go when I hear client advocate.
Yeah. Yeah, that's really good. That's a really good point. Peter, what about you? What do you think? What comes to your mind when you hear that?
So for me, the earliest indication is when a client starts running up to you at a networking event and latches onto you and starts introducing you to all the other people that they have. That is one of my favorite things. And frankly, that's why I love in-person networking so much, because you can't duplicate that on virtually. And I absolutely do my best work in person. So
Oh, yeah.
I love when clients run up and grab hold of my arm and, oh, this is Peter. Oh, this is Lisa. These are they solved this problem for us.
Yeah. There's nothing better than a client advocate that literally is a client advocating for you by bringing you around and introducing you to people. And it's a nice feeling to have. Kelly, this question is for you. What's one change you've made in your client experience that had a noticeable impact on loyalty or referrals? I know you're deep with the technology. I know you have some stuff in there, but what is something that you've done that you've taken some notice of?
So I think, in order to have like a good impact, you really have to keep that personal touch, even if you are trying to have an efficient firm. Everyone's like, use technology, just have emails, messages, like limit client contact. And I'm all about it, but like people still need to have that human interaction. They need to see your face.
Yeah.
They need, we don't need to be in person. I have clients from here to California. I've never met half my clients in person, but, having true like meeting cadences set up. Like I've spoken to some people recently and they're like, oh, I say that I'm available for meetings, but like I don't send them a calendar link. Like I don't like need to force a meeting with them. I'm just there for them when they're available. Like I'm actually on the opposite side of the spectrum. Like some people want to avoid these things. And I feel like forcing people to get a little uncomfortable and asking uncomfortable, questions sometimes gets that relationship like much deeper. And, by having those deep conversations and being that person and hearing them and seeing them, I think that has a bigger impact on loyalty. Because if I never saw them or never had these deep conversations, like, why are they staying?
Yeah, this is very true. And I find that most relatably in like my clients that I have the quarterly plans with, where we're forced to speak quarterly. And so every time that we have that conversation quarterly, and it's not all business, it's just a normal human interaction. We're just chatting, we're BSing about stuff. And next thing they're like, yeah, so I bought that house. And I'm like, wait, what? You bought a house? What are you talking about? But it's those relationships, it's those kinds of things that really keep people coming back to you. Peter, this is actually a good segue into it. So how do you intentionally design client touch points, onboarding check-ins, reporting to build that trust and make clients feel valued?
So I love this question. So I just want to, I'm also a judge in Workflow Showdown. 2 of the 5 entries were workflow, onboarding workflows. We as bookkeepers and accountants, we need to treat our workflow as one of the most important things we do for a client. So one of the things that I do to make sure the workflow goes smooth is it takes me time to go through the workflow checklist like everybody. So what I do is I'll schedule a call with a client and I'll share my screen and I will say, I'm doing my onboarding. You can watch, and as I do my onboarding, if you have any questions, you can ask or you can say nothing. And for some of my clients, that has been, I think, made the process a little smoother. So because of our clientele, we tend to be someone's first accounting firm, so they have no idea what to expect, and in many cases, they're terrified of accountants. And because they were told by their parents, by their friends, by their teachers, you can't be a musician, you can't make money as a author, you can't make money as a game designer. And it's our goal to change that mindset. So we walk our clients through as much as possible, and we check in before their clients and ask questions, and we check in during their clients. And if we don't hear from them in a little while, we'll reach out to them. We have some clients that contact us every day, that give us a phone call, 10-minute phone call. They're so excited about what they're doing, and they share that with us. And they know to call at the end of business day, and we don't mind taking that call. As a matter of fact, my wife and I miss it when it doesn't happen. So checking in on your clients and building that trust to make them feel valued will hit your own bottom line as a bookkeeper or accountant. So,
yeah. You know, one of the things that comes to mind is not a question that we had written down here, but as you were saying that about, you know, keeping in touch and having those 10-minute conversations and doing all that, the challenge that I think a lot of folks in the chat will probably agree, and if you do agree, hit that emoji or something like that in there, is that we have to limit that and, like, you know, set boundaries. I know we talk a lot about boundaries, but, you know, how do we balance that? And I know Kelly may have some thoughts on this. I'm going to go to you on this one, but how do you balance that whole, like, okay, I'm available for you and I want to be a human being and I want to be your advocate and your trusted advisor. Balance that with don't take up hours and hours of my time for free. So how do you handle that, Kelly?
That's a good question. And I feel like the scope is a big problem for a lot of people. And, you know, I do want my clients to reach out to me to tell me that they're going to buy that home, because you're right. A lot of those things don't come up until they're like, oh, wait, maybe I should have told you this. Like,
yeah,
well, yeah, I should be your number one. However, I don't want you calling me every day. I don't want you texting me. Like, once you open up the floodgates, then that's where I think the boundaries go wild. Like, I have a phone line and no one really calls me. We get a lot of leads. I have a work phone, I have a personal phone, and, you know, yes, maybe we get like 1 or 2 phone calls a week, but everything else I've just trained people to use emails and do scheduled calls. And and listen, we answer all of our emails within 24 to 48 hours. Most things are not an emergency. You know, we don't need to talk the minute you call me. And, you know, if you do, yeah, I can definitely make an exception. I had somebody who had fraud yesterday and I took the phone call immediately after they sent me an email. Like, I am willing to do that. But I think, you know, the more you let people take advantage of you, it becomes a problem. And you have to set the boundaries at the beginning. When I have a call with a client, when I have an initial consult and I give them a proposal, I'll say, you know, this includes quarterly calls. We're available for questions in between if you need, you know, 5-10 minutes here or there. But if it becomes excessive, then we have to talk about a scope change and a change in the fee. And I think people, you know, receive that pretty well.
That's 100% true. Whatever it is that you end up putting in that agreement and you speak about it at the front, and it's when you don't speak about it. It's when you don't mention it and all of a sudden they're hitting you up and you again don't mention it. You're just like, yeah, okay, you call me. Yeah, okay, you call me. You know, and that's where that pattern continues to build. Peter, what's your take on that? How do you?
So,
go ahead.
I do want to address that because Kelly makes some good points. The fact is, if all of my clients were given that level of service, there'd be a problem. So in the particular case, this client is an exception. He's probably our best client. We've had him the longest, and we've made the biggest impact on his business because we've had the amount of touch points we do. So if every client were to do that, yeah, we would never be able to get any practical work done. But so Kelly, you're absolutely right.
Yeah.
If every client called you all the time, you cry. We'd cry.
Yeah. So. It really becomes a challenge. And, you know, especially Peter, you know, those clients that you have, I have a few of those, you know, the musicians, the artists, things like that. They're the best. What I like about them is that they understand, like, once you teach them what the value is and you get them to understand, because they're very much clueless about finances a lot of times. And so when you go to that realm and help, even if they have a little bit of a light bulb moment, you are like a superstar, and you will be that person that they will grab by the arm and take to, to meet everybody and all their friends. But there are also those that just don't understand it, and they're just very confused by it, and it hurts. So actually there's a question right here. I think I'm going to just take this one. So how do I actually try to stop it if the client, already were used to calling me nonstop? What is the best way to address it? Or to approach the client without sounding rude? So Kelly, I'm going to let you take that, and then I'll give my thoughts.
I think, you don't have to say, hey, you're being rude, stop calling me. I think it's like, hey, you know what? We're just assessing things within the firm and making sure that we're running efficiently and billing appropriately. And it's the perfect time of year to do that, because we're getting into the new year, right? Like, if you're not used to assessing your fees at this time of the year, you should be. We're getting into tax season. Like, everybody should increase their fees a little bit, right? And it's a good time of year to kind of approach it from that perspective, and not just like when the person's calling you and be like, yo, you got to stop.
Yeah, that's a really good point. I think if it becomes super excessive, like they're calling you every day, I honestly, my experience is that it was those initial clients, those back in the day clients that I was charging like $500 or $300, or they were on like the lower side of my spectrum of fees. Those are the clients who I've always found to be the ones that were always bothering me and always like being extra. It was crazy. And it's crazy how much, when you raise the fee, just to your point here now in this toward tail end of the year, and you raise your fees, and all of a sudden you realize that the people who have found value in you stop, like they're the ones that don't bother you as much. So it's really this weird like combination. And I always say this, like I tell people this all the time. If your phone rings and your phone is ringing and you pick it up and you're looking at it and you're looking at the phone and you're going, oh God, not him again. That's typically, I can guarantee you, is the client that's on the lower end of that spectrum on your fees, and the one you're kind of like, oh God, I really like, I don't want to work with this client. So it tends to kind of run together. Peter, what's your take on that question about how do you approach somebody who is maybe bordering the line of taking advantage?
So the easiest thing for us is we require them to schedule a meeting. So with the exception of a handful of clients who we do pick up for various reasons, our clients schedule meetings. Some of them are sent out as monthly regular meetings sent out through Financial Sense client tasks. And other ones, they'll want another meeting during the month, which if they have the right package, they're entitled to. And they know to book a meeting. I also don't allow a booking within 24 hours of the current time. So it requires it to be booked into the next day. And that's the way we go. We do train our clients that it could take us 24. In some cases, depending on their package, it might take 48 hours to get a response from us, because we do include cadence of responses in packages. So our better clients get faster contact.
I like that. So, you know what? This is, again, I'm going to go off script here for a second because I like this. You're talking about packaging and tiers and things like that. And I think this is a really powerful conversation because it ties into, again, happy clients, management expectations, and doing that with packages. So Kelly, can you just give us some of the packages that you offer? What do your tiers look like, and what's the pricing on that?
So, really good question. We do customize all of our engagements. We don't have like a bronze, silver, gold here. It's something that I'm thinking about in the future, but for me, it feels very difficult to get everybody in 3 different boxes, right? Yeah. So, we have a very specific like lead process. I go through everything ahead of time, have the call with the client, follow up. And most of our business clients are on a quarterly basis for meeting purposes and, giving advisory services, tax projections, and then we do monthly financials. So, our base fees for that are usually $750 a month.
Nice.
That's probably like nothing going on, like one person, no payroll, like one bank account, one credit card. But I'd say most of the other clients are like 950 and above, depending on their activity. And then I bill tax returns separately.
Okay,
So
nice.
that doesn't include the tax returns. That only includes like the bookkeeping and the meetings. And then all of my personals and all of my business tax returns are billed separately. And actually, I'm very transparent about our fees. All of the base fees are listed on our website. So if anybody needs any, assistance or guidance, you can take a look there. But we actually just brought on somebody, with no bookkeeping and just advisory services for $600 a month to just go over quarterly work and $2,000 for the tax return. So
Great.
it's almost a $10,000 fee for, companies probably doing $1 million, $1.5 million to meet 4 times a year and do the tax return.
Solid. That's great. And for something like that, is that, are you, what was my question? Oh, so if they do their own bookkeeping, I guess, in that scenario, if you're not doing their books
outside bookkeeper.
and do you like
And
somehow
I
vet
looked at
that?
it and I approved.
Okay, I was going to say, how do you vet that? Because your own bookkeeping is a dangerous, slippery slope of that. So that's awesome. And do you do any tax only stuff like?
Not really.
Nice.
If it's a special referral or like a one-off thing, we'll do it. But for the most part, like I'd prefer to do everything in-house.
Wow. Okay. Nice. That's awesome. But I see Misty here saying, I want to get there to no tax only. I got this probably say like 100-ish grand in tax only, but they are, they are kind of like more higher tier. They don't, it's one touch point in the year towards the end of the year. And so it's pretty, I feel like it's pretty solid, but the financials for those, it's typically a workup. So it is still tax only. But what about you, Peter? What kind of packages? What does yours look like?
So we do have a tiered packaging. It's because of our clientele, our pricing varies probably more widely than Kelly's.
Yeah.
And even our smaller clients, we have packages.
Oh. Yeah, I think we might have lost them there for a second.
About an hour a month and runs from about $350
a month. Okay.
We build and up from there, obviously. We build taxes, both corporate and personal, separately as well, and they're not included in our packages. Although if a client requests a package with a tax return, and in other words, they want to pay their corporate tax monthly over the year, we'll add a prorated amount to their package as an add-on. And some clients prefer that because corporate taxes can get very expensive.
Yeah.
If I can add one thing, I was a fast food manager as a young lad, like many people. One of the things that I learned in fast food is a customer, when they come to your restaurant, has a set amount they're comfortable paying. When you're an accountant, that philosophy is still true. So I call it the amount a customer is happily willing to give you. As an accountant, when you're designing your packages, if you're communicating well with your client, you will hit that number. You will get closer to that number. You'll know exactly what they're comfortable with. Mm-hmm. And in many cases, that number will probably be a little higher than what you thought.
Yeah.
And you'll be able to get to a number that they feel happy they're giving you every month. And when you're at the level of you're happy and they're happy, that makes them feel better about your service. So
yeah, it's a really good point too, especially on those proposal, like those initial calls, the intake calls. I'm actually not shy personally about asking, hey, first of all, I usually ask, what were you paying?
Yeah.
Right? Like, I try to get that. Some people kind of tend to hold that like near and dear and don't really tell you. So what I do in that kind of scenario is I'll see if I can get a tax return out of them or something to look at. And then when I look at the tax return, I can typically look at professional fees and have a gauge of where they were at. So, because a lot of people want to hear what your first offer is going to be, somebody said they could see it in their QuickBooks, but in the intake section, you might, part of it, you won't necessarily have access yet. They've just booked a call with you, for example, and they want to know what your fee is going to be. So I'll say, hey, what are you used to be paying? And then you kind of gauge it from there to see what they will be comfortable with. And yes, those intake calls.
A comment on that, actually, Yuri, because any lead that we have it automated, and everyone has to provide tax returns before we meet.
Ooh,
I don't meet with people unless they give them to me.
That's
nice.
Because you don't know what even what they regurgitate to you, it's still 9 times out of 10 incorrect. So, and it's all, I don't have to actually tell anybody this. This is all like listed in, you can build this out in Financial Sense. You can build it out in Calendly. You can build it out in bookings. Like I take a fee and I say, you must follow these instructions. Do you understand? You must upload your tax returns before our call. They have to say yes. And then we actually input the tax return before I even have a call with them in our system so that we can get a better understanding, because sometimes there's errors. I mean, like more than half the time there's an error. So then we can bring that feedback to them and provide them that much more value
on the call. I like that. That's a really good point. And plus, you're going to see the whole dynamic. You're going to see everything. There's not going to be any surprises in the pricing aspect where you thought they said that they did this and this, but then, you find out that they have 3 rental properties instead of 1 or and everything is all jacked up. So really good points. I want to also talk about, we're talking here about the whole client satisfaction process, managing expectations and keeping happy clients. I think a lot of it, again, ties into this whole conversation about pricing, expectation setting, and all that. How do you manage? So, post, you send out the engagement letter. Let's say they signed up for the quarterlies, and they signed up for your bookkeeping, for example. How do you manage expectations around when they should be receiving, like their books, for example, and booking their calls? Because what ends up happening a lot of times is people sign up for this, they start paying, and if their expectations are, I'm going to get my financials by the 5th of the month, and it's the 7th or 8th, that first like 3 or 4 months where they're paying and they're not getting, it's going to create some friction. So how are you, how would you go about managing that kind of on a front end to make sure that it does not get missed? You give those expectations. How do you do that? I'll start with you, Peter.
Another great question. So first of all, in your engagement letter, which if you're not using engagement letters, you outline all of the dates that you're going to have things back to them. The other thing is, and I use the Scotty method, and the Scotty method is if you need till the 10th to do something, you say to the 15th.
Oh, I like that.
And then when you send it on the 10th, that you look like a genius. So that was Scotty. For those that don't know Scotty from Star Trek, that's what he would do. He would tell the Captain Kirk, it'll take me 3 hours, and then he would do it in 2, and Captain Kirk would think he was awesome. But the other thing that does is if there are people that say there are no bookkeeping or accounting emergencies, that might be true, but there are times when information is needed faster than other times. So a client may need a quick infall of cash and may have to go to the bank. So if you need to get them some updated financials, and you can do it, you may have to put a little extra effort in. If you padded your time a little bit and they're used to the 15th and they come to you on the 10th when your internal time says it should be done by, when you tell the client, I can give me 2 hours, I can get it to you.
Yeah.
Again, you make yourself look really valuable in the client's eyes. They don't have to know that you already had it done this morning. But when you tell them, I can get that for you, but just give me a little time, I'll clear my schedule for you. You're not really, you're cheating. It's a cheat code.
Yeah, I do it all the time too. We'll give it like, let me get that to you. I'm a little bit busy. And then, within half an hour, I made some time for you. Yeah, definitely that. It's funny. I see a lot as under promise, over deliver. I have seen in every single session that I've been at in WorkflowCon, yesterday and today. And it's true, because the reality of it is, people have weird expectations of based on their prior experiences. And I don't blame them necessarily. Like, that's what they had before. So when they come in and, we set expectations, or sometimes they're coming in worried, it's not a good look. Kelly, what about your take on that?
So, I think, first of all, I don't have clients like hammering me for financials, like, especially not at the end of the month. Like, we generally tell people, like, around the 15th of the month, like, but it probably falls between like the second and third week of the month when we get them out.
Same.
However, like, we're doing data entry for all the clients, like, on a continuous basis throughout the month. So, like, mostly everything is reconciled by the second or third day of the month, depending on when the weekend falls or a holiday. And then it just needs adjusting journal entries and a better eye to review it.
Yeah. I like that. And then my other question too is, so what now for the quarterly, we can get a little more granular, because again, expectations, things like that. On the quarterly side of things, when you're having those meetings, how are you guys scheduling those? Is that automated somehow, or are you like sending out like an email to all your clients? Like, how do you manage that part?
So I'm just going to hop back in here and say, like, we're managing all of the financials through Keeper right now, which I know a lot of people do.
Yeah.
And within that, we also put in due dates of like when we're actually meeting with the client, so that it gets reviewed in time. And then I have, enough time to hand it over to the tax staff and get a projection done if that's what I'm going to do before the meeting. But generally, we send out a calendar link that's customized at least like a couple weeks before we're looking to have the call. But you know what? Every client has a different personality and different tendencies. So like, we know who is like kind of chomping at the bit for the meetings, and who's like, you know what? If I give them a calendar link that opens up on October 15th, some of them won't book it until November 15th, because that's just the way that they are. So you got to like know what your clients want and service the ones that, are a little bit harder to deal with, or just like have that more aggressive personality. You just have to know their habits.
That's very true. I literally just got an email from a client of that nature who was like, where is my Q4 invite, meeting invite that we were supposed to have? I thought we were supposed to have that. And I was like, I sent it to you. Must have gone to a spam. But, these things happen. And like, to your point, that's a really good point. Knowing your clients is so important. So this is super, super good. So what about you, Peter? How are you handling the kind of like more like kind of schedulize? Are you letting the clients do it, or do you have an automated system that sends out the request for that?
So we use Financial Sense client tasks pretty much exclusively for booking our meetings set. For example, quarterly meetings, the client will get a request a few days before we want them to book it. Usually, most of our clients are chomping at the bit to get their meeting, like Kelly says. So they book almost right away. I can tell when I get into the office, some of the clients have already booked meetings. Requests go out at 7 a.m. in our case.
Oh, wow.
Other clients who have different packages are able to book meetings themselves throughout the month. So they may get one meeting in a month they can book at their own. If they don't book it, they lose it. So for the most part, it's a kind of a combination of both.
Yeah. It's really good points there. We talk about, I think one of the important things too is handling like a bad situation, or we've all had these issues. I certainly had it myself too. Where a client is not so happy and has some missed expectations and something like that. Can you guys kind of speak to like an example of that when that happened, and how did you manage that from your perspective? I'm going to go first, just because I'm just going to open it up and share some vulnerability on that one. It actually happened on vacation. And this was totally my issue. So to go back to the packages that I offer, I have a monthly package, a quarterly package, and a tax-only package. So typically when I have the quarterly packages, the clients are doing their own like books. I don't really necessarily offer bookkeeping in that one. But and I'll check it over again, just like Kelly said, make sure that it's correct and that it's accurate, so I can rely on that. But the monthly ones get the bookkeeping. So what happened was, this one client, I took him on earlier this year, but I agreed at that time that with them, I was going to also do the bookkeeping piece because it was very straightforward. They had like very little transactions. I was going to do the bookkeeping in their QuickBooks and also do those quarterly meetings and the return. So I think what ended up happening there was he signed up for the quarterly one, and I was like, okay, cool. We're going to do he's going to do his own books. But in my situation, that was a miscommunication. And then in my mind it slipped. So then he was like, where are my books? And so that was a little bit of a challenge on that first meeting. And so the way I handled that, I just, owned up to it. Like, listen, man, like, that's totally my bad. It's just something I typically don't do on the quarterly ones. So we kind of messed that one up, but owned up to it. All was good, fixed it up. And now going forward, it's fine. But that's one example. Oftentimes it kind of slips through the cracks sometimes. They're not all perfect. But Kelly, do you have an example of something like that as well?
So I actually just had to fire a client yesterday. They've been a client for like 3 years.
Wow.
And I don't like firing clients, but I have to say, like, I'm quick to pull the trigger when, like, I know that it's not a good fit. And I give it my all. Like, I want to give people the benefit of the doubt. Like, sometimes people are having a bad day, or they're, you don't know what people are going through. But for, this particular client, such a nightmare. Like you said before, like they bought a business and they didn't tell me that they closed on this business. And they've been a client for 3 years. Okay.
Great.
And 3 months after, they're like, hey, we're like ready to like start doing some work. We created this QuickBooks. We've been using it for 3 months.
Oh God.
Well, turns out it was an absolute disaster. And they were required to file sales tax in 2 different states. We're not filing it correctly. Okay. In these cases, we actually get a retainer because we don't know how much time it's going to take to do the cleanup work. I don't do flat fees for cleanup. It doesn't make sense because you really never know. You could think like you're going to go in there and it's squeaky, like it looks okay.
Yeah.
And it takes 3 times what you thought. So that's basically what happened. And then the guy, he wasn't responding to us right. This guy always had a little bit of an attitude, like little red flag. Someone was asking, like, what are the flags? Like, I don't know. He was like talking bad to his wife, like in front of us on calls. And I'm just like, that never sits well with me.
Yeah.
And he's like, this is getting too expensive. And we told him we were going to file a sales tax return for September and October. We sent them the numbers. We asked him questions. Guy never got back to us.
Oh God.
After harassing him. Then he's like, on the call yesterday, he's like, I got a $450 penalty for not filing September. And like, yeah, dude, you didn't answer the emails. And he's like, I've just been so busy and blah, blah, blah. Yeah, dude, we're all busy.
Yeah.
Okay. We are all busy. That is not an excuse. So don't let the door hit you where the good Lord split you. I sent him the disengagement letter and I refunded him the rest of the retainer. And then he wrote back, like, the feeling is mutual. And I'm like,
ooh.
If I could put up 2 fingers now, I probably would.
Yeah, but you know what? It's always like that. The reason I always find that, like, the reason what some of those clients, when they get a little saucy with you and they have that little edge to them, I feel like there's already something there that, is chomping at the bits at them. And then the feeling is typically also mutual. And so it's just like this really hard line where you go, okay, do I really want to just pull the trigger and get rid of this client and be done with them and give it to somebody else? Or maybe we can get to a place where we'll be, in a better situation. Peter, what about you?
Well, we just had a client leave us a bad review for the first time.
Oh boy.
And yeah, frankly, it was their expectations and ours were different, which is kind of typical. So bottom line, we sent them a proposal. They said, no, we just want a tax return. Okay, so we did a tax return. During the tax return, we in an audit of the previous year, we noticed a problem, and it was inconsequential. We really meant nothing to them, next to no extra credits or not. And we said, yeah, we'll take care of that, which was probably the wrong thing to say, because we weren't going to charge them for it. It was going to take minutes, but it's not important. So to us, we'll get to it when we get to it, because
Right.
we weren't charging them. And for the client, they were really upset that, well, if it's going to take minutes, why don't you just do it? Well, we will. But probably next time your tax return is. So the lesson is, we should have actually charged them for it, for that, and we should have sent out a re-engagement letter for that, as small as it is. So lesson learned for us.
Yeah.
So
Those expectations versus reality things, and managing that is the toughest reason, and is the main reason why clients kind of turn away and might leave us or might not be so happy with that. Speaking of reviews, and go ahead, Kelly. I think you were going to say.
I'm just going to say, someone just said in the chat or the Q&A, like, I have a client for 3 years and she hasn't been paying me for a year because of cash flow issues. So I just feel like I need to address, like, if there's a non-paying client, first of all, I get all my fees up front. If you're not paying me, I'm not doing the work. So, like, let them fly, because that's not you're paying your staff to do the work, or you're doing the work. You have expenses and you're floating them. Like, we're not here to give loans. We're not banks. Like, there's plenty of work out there.
Yeah, that's a really, really tough. It's a tough one. Peter, were you going to say something about that one?
Yeah, the cold hard fact is, if the client's not paying you, the business is probably not going well, period. And you may have to sit them down and have the hard conversation with them about winding their business up while they still can. Frankly, Andrew Weir is a lawyer, has this saying. He says, retainer is like gas. A car doesn't move without it. And for our firm, you've got to get paid before you start the work, because the money is your fuel. And if you can't run a car without fuel, then you can't run a bookkeeping or accounting firm without money. So
true.
You may have to have a hard conversation with the client. But
it's never easy, but it's those expectations that I think will smooth the way for, and if you end up saying those expectations and you speak about them initially, and the client's unhappy and they said they're going to leave you, great. Honestly, great, because we're going to have problems down the line anyway. So I like that. I'm going to, I had some other questions that we could talk about, but let's go to these questions that are in here, because they're kind of building up, and we'll try to answer as many of them as possible. So Shannon asks, have you found that it's sometimes difficult to get the clients that send you the best referrals to actually leave a review for you? Oh, what a great question, because that was my next one. How do you handle, are you guys active on seeking reviews? And how do you get people to actually like give you a review on like Google or whatever platform? Kelly.
So I have an automated email that goes out once a year. Like, when we finalize the tax returns, everything's been e-filed. We send this automated confirmation email. Hey, your tax return's been filed and accepted. Here's where you can find it if you may need it during the year, so that they can reference it if they need. And then we say, if you're happy, like, please give us a Google review and we'll include a link. So that's the only time of year that we do it.
Nice.
And we have 43 Google reviews. So, like, I think that's pretty good.
That's great. Yeah.
All but one is 5 stars from an angry client that I fired for bad behavior. And if you read it, you could probably tell that it was her behavior that she's like, fired me. Like,
yeah. Well, that's great. 40. That's a good amount. That's great. What about you, Peter? How are you encouraging your clients to give that review without being awkward?
So we don't have a process in place. What I do is I get clients. I get prospects come in and want to talk to some of our existing clients. So I have them set up to do that. I'm probably a little paranoid, but I'm always concerned about clients leaving too much information online. And in our industry, and I'm sure the two of you have got them, I've had emails, spoof emails from clients asking me to change payroll information. So I always ask my clients to make sure they try to leave as little identifying information as possible on any reviews or correspondence with us that's public for their own protection. Accounting firms are the single greatest target of cybercrime. We are the number one target, so I take it very seriously with my clients. That, and I understand there's a penalty for me for doing that because I don't encourage as many reviews as some other firms. And there's nothing wrong with encouraging your clients to leave reviews. We prefer our clients to refer us with word of mouth. So
Yeah, I got no reviews, so I'm to some extent I just haven't really implemented that. But a really good point on the security. Let me see. Kaylee has a question. How do you professionally increase boundaries for clients who have already seeped into personal boundaries, late night texts, unscheduled calls, and redirect them to only calling or emailing the office during office hours? Ooh, that's kind of that's a tough one. Kelly, I'm going to let you take the first stab at that one.
So I think somebody else asked this in the chat too, but like I just highly would recommend, like, you know, just pivoting and saying, hey, you know, we're no longer taking emails and or texts and phone calls, and we prefer, you know, to contact us through email or chat, however you run your firm, and, you know, if you do an internal management software. But, you know, don't make it about them, make it about a firm change. And it's very difficult to manage text messages. You can't flag a text message. If someone texts me during the day and I take a look at it on a call, I'm like, am I going to remember to reply to that? No. Like, so it's actually for their benefit that they stop texting, because it doesn't work.
Yeah. What about you, Peter?
So one of the things that we did was we moved our clients. We use Titan File for document exchange, and Titan File has this feature where you can talk about the documents that you upload, but it can also serve as a client communication tool. So when we moved all our clients to communicating on Titan File, we stopped responding to them on any other medium. We would respond if they sent us a text message. We would respond in Titan File. If they sent us a phone call, we'd respond in Titan File, telling them to book an appointment. So we kind of made our clients go cold turkey. You can use I think you can use the financial client platform or portal for this as well, for communicating with your clients. So if I would move the conversations to, specifically to it. So you get late night text, don't respond, but
yeah, we kind of lost him a little bit.
Peter.
Late night, there he is. Late night text. Yes, late night text. Don't respond and don't respond. Be more proactive about those things that bother you, because if we keep responding to those things and doing that, I mean, the answer is, and the message you're sending is pretty clear, which is, you know, hey, we're going to keep doing that. So what's their motivation for stopping to do that? So I like that. We had some, I'm just looking through these questions here. Some of them we kind of already answered in the ones before. Ooh, what are some creative ways you provide value to your clients? I like that question a lot. So my take on it is this, and this is, again, me. I find that some clients, I mean, the value obviously is in the eyes of the beholder, so to speak, in the eyes of the client, what their value is. And so a lot of times it depends on what their prior experience with their prior accountant was like. So for instance, if they were never able to reach their prior accountant, a very common thing that I get all the time on these calls, I'm just looking for somebody that I could contact and reach out to. You know, again, once you set those boundaries, but you actually respond pretty quickly and can have the conversation, and that alone could be the value that they're looking for. So it doesn't have to be anything like I saved them $1 million in taxes, you know what I mean? Because we certainly obviously cannot guarantee that. So, you know, there is that. There's really just sheerly having touch points throughout the year of where you have a scheduled time, you sit down, you chat. That alone drives value for a lot of people, just inherently by the fact that you're talking. Kelly, what's your take on that of providing the value?
So, you know, one of the things that popped into my head was how we don't really meet with a lot of people during tax season.
Mm.
And it's like one of my biggest wins because it's the way that I'm able to get so much done and still spend time with my kids. And to provide the value, we record Loom videos reviewing the tax returns and
Nice.
going through line by line on like the tax summary. And it's usually a comparative summary for last year. I use Lacert. It's got a nice little report that comes out. And I will say, okay, you know, this is what your gross income was, blah, 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 and explain any changes that happened year over year. And, you know, it usually takes me around 5 to 10 minutes to record the video. It's actually a great review process because I have reviewed the return and then started doing the review line by line and been like, oh, wait, like that's not supposed to be there. So like it's a third level of review for us that I absolutely love. And the client can watch it whenever they want, with or without their spouse, multiple times. And then, you know, they're able to actually like understand what's going on as opposed to like, you know, the meetings are great, but it's like, are they listening? Are they distracted? Are they going to remember what happened? And, you know, sometimes I'll say, this is the summary, but I think you need to make some decisions here. So like, let's hop on a call and then give them a calendar link, but it really prevents meetings. Like it's fantastic. So that's like my number one value prop.
Awesome. We are out of time, unfortunately, here with our session. I know this was really fun. I think I'll hopefully drop it in the chat if you got some good value out of it. I really like that idea that Kelly just had to read the Loom videos and creating that way for them to reference that instead of bothering you with that question. That was great. Peter, thank you so much for all your input as well. I know we're coming back for the other session where you're going to be judging the contest, so we'll still see you. But after that, enjoy the rest of your vacation too. Hopefully everybody got some good value out of it, and we shall see you in the next session.
Thanks,
Thank you very much, everyone.